In this video, we're going to discuss 2 reasons why Boeing stock is a hold today. Before we begin, I invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education efforts. With that out of the way, let's talk about Boeing stock. Boeing has been one of the best performing stocks over the past few years. The stock has returned nearly 168% over the last 5 years, which compares very favorably to the S&P 500's return of 46%. However, over the last year, shares are down 4.6% while the S&P 500 is up 3.3%. As most investors know, the stock has struggled following 2 tragic airplane crashes and the resulting grounding of one of the company's most popular aircraft, the 737 MAX. This video will examine the impact of this grounding as well as Boeing's most recent earnings report, dividend history, and our projected total annual return to determine if the stock should be purchased by investors today. Is this underperformance in the stock an opportunity for investors to pick up shares of a quality company or a sign of things to come? This video will examine the issues related to Boeing to determine if investors should buy, sell, or hold the stock. Before we answer that question, let's examine the company's business model. The Boeing Company is the largest commercial jet manufacturer and the second largest military weapons producer in the world. The company has been in existence since 1916. Over the last 100 plus years, the company has gone from making canvas and wood airplanes to producing today's advanced aircraft. Boeing is composed of 3 divisions: commercial airplanes, defense, space and security, and global services. Boeing and Airbus effectively operate as a duopoly in the commercial airplane business, as they are the only 2 companies that produce wide-body aircraft. Boeing delivered 800 commercial airplanes in 2018, a new company record even though the company dealt with a slowdown in production due to supply issues. Boeing trades with a market capitalization of $196 billion and generates $100 billion in annual revenue. On October 29, 2018, Lion Air Flight 610 crashed shortly after takeoff. A few months later, Ethiopian Airlines Flight 302 crashed on March 10, 2019. The 2 plane crashes collectively killed 346 people. Ethiopian Airlines grounded its fleet of 737 MAX aircraft the next day. That same day, China grounded the plane, making it the first government body to do so. Other governments around the world did the same, with the US following suit on March 13th. All 737 MAXs remain grounded at the time of this recording. The likely culprit was the 737 MAX's Maneuvering Characteristics Augmentation System, or MCAS. In both cases, the MCAS was suspected of responding to flawed data and sending the airplanes into a dive shortly after takeoff. Boeing has suspended deliveries of the 737 MAX, though the company has continued production of the aircraft. Prior to the grounding, Boeing had more than 4,600 unfilled orders for the 737 MAX. However, multiple airlines around the world began canceling orders. The company also reduced production of the 737 MAX from 52 per month to 42 per month. In May, Boeing delivered 30 aircraft to customers, a 56% decrease from the previous year. Net orders for the first 5 months of 2019 was a minus 125. These declines are expected to continue while 737 MAXs are suspended. It was reported earlier this month that the FAA had discovered a new issue involving the 737 MAX. More than 300 of these aircraft, as well as the previous generation 737, could contain improperly manufactured parts, which will have to be replaced. Airlines have also asked for reimbursements from Boeing, as they have had to extend leases on their current aircraft, rearrange aircraft assignments, and cancel flights. It was also revealed that pilots from American Airlines urged Boeing to create a fix for the issue following the Indonesian airline crash, but their requests went unanswered. The company is likely to face lawsuits from families of the victims. Each month that the aircraft is grounded is estimated to cost Boeing nearly $2 billion in revenue. Boeing produced a software patch that it said would fix the issues with the MCAS software and completed its first engineering flight on April 16th. 1 month later, the company completed its updated software for the 737 MAX, following completed testing using a simulator and engineered test flights. Even so, the 737 MAX isn't expected back in the air until August 2019. This delay in deliveries of the 737 MAX has had a material impact on Boeing's business. The company reported first quarter results on April 24, 2019. The company earned $3.16 per share, which was 3 cents above estimates, but a 13% decline from the first quarter of 2018. Revenue dropped 2% to $22.9 billion. Boeing delivered 149 commercial airplanes in the quarter, which was a nearly 20% decline from the previous year. Operating margins for the commercial airplane segment were lower by 100 basis points to 9.9%. The pause in 737 MAX deliveries was the reason behind all of these metrics declining, showing just how important the aircraft is to Boeing's business. While some orders have been canceled, Boeing's backlog of 737s is nearly 4,500 aircraft. Even at the reduced production rate of 42 aircraft per month, the company has nearly 9 years of production in its backlog. If Boeing can provide a software fix for the 737 MAXs, and the plane is no longer grounded, it is highly unlikely that this backlog would suffer a significant decrease going forward. Until that time, investors should expect to see additional cancellations. Other areas of Boeing's business performed quite well during the quarter. The company's 787 production increased to 14 aircraft per month. Boeing's first 777X test aircraft was produced, and the first delivery is set for 2020. The company ended the quarter with a backlog of more than 5,605 aircraft, worth more than $400 billion. The defense segment grew revenues by 2% and operating margins increased by 110 basis points. A higher volume of satellites, weapons, and surveillance aircraft were the primary reasons for growth. This division was awarded several contracts during the quarter, including a multi-year contract by the U.S. Navy for 78 FA-18 Super Hornets. The company also delivered its first 7 KC-46 tankers to the U.S. Air Force. This tanker program had been several years behind schedule. The defense division had a $67 billion backlog at the end of the first quarter. Revenues for the Global Services division grew 17% year over year. Higher volumes across the portfolio accounted for this growth. Despite growth in most areas, the issues related to the 737 MAX are an overhang on Boeing's business. The decrease in operating metrics reflects this. This is likely to be an issue until the aircraft is no longer grounded. For context, the 737 MAX represented slightly less than a third of total airplanes delivered in 2018. Because it is uncertain when deliveries for the 737 MAX will resume, Boeing has pulled its guidance for the current year and will reissue new guidance at a future undetermined date. Previously, the company had guided towards earnings per share in a range of $19.90 to $20. Because of the importance of the 737 MAX to the company, we have lowered our estimate for earnings per share to $16. Using the current share price of $350 and our estimate for earnings per share, Boeing stock trades with a price-to-earnings ratio of 21.9. This is above our 2024 target multiple of 18 times earnings. If the stock trades at our target price-to-earnings ratio by 2024, then valuation would be a 4% headwind to total annual returns over this period of time. If the company were to achieve our target for earnings per share, it would represent just a 1-cent decline from the previous year. This shows that Boeing's business model is not cratering, but investors who have owned the stock for the past few years due to the growth that it offers may still be disappointed. Shares of Boeing compounded at a 24% rate from 2009 to 2018. Much of this can be explained by the nearly 50% decline in earnings per share from 2008 to 2009. From 2008 to 2017, earnings per share grew at a rate of 12% annually. We have lowered our target growth rate to 8% from 12% because of the pause in deliveries of the 737 MAX. While Boeing faces headwinds at the moment, the company has excelled in providing shareholder returns in recent years. While the business has performed quite well recently, it shouldn't be a surprise that Boeing is a very shareholder-friendly company. The company has returned a large amount of capital in the form of buybacks and dividends to shareholders. From 2009 through 2018, the share count went from 726 million shares to 550 million shares. Boeing lowered its share count by an annual rate of 2.7% per year over the last decade. We should note that the company has halted its share repurchases as a result of the issues with the 737 MAX. It is probable that share buybacks will resume once the company has a firmer handle on these issues. Despite maintaining the same dividend in 2010 and 2011, Boeing has compounded it at a rate of more than 15% over the last decade. The company's dividend has increased more than 200% over the past 5 years. With a 20.2% increase for the payment made on March 1, 2019, Boeing has now increased its dividend 8 consecutive years. This leaves the company 2 years shy of attaining dividend achiever status. Dividend achievers are companies with at least 10 years of consecutive dividend increases. Despite the issues that the company is facing, we feel that Boeing will likely continue to grow its dividend in the coming years. As stated previously, Boeing earned $3.16 per share in the first quarter. For context, the company currently pays a quarterly dividend of $2.06 per share, which implies a payout ratio of 65% for the first quarter. Looking out over a longer time horizon, the company's dividend appears to be in even better position. Boeing generated $16.01 of adjusted earnings per share in fiscal 2018. The company distributed $6.84 of common share dividends during the same time period for a dividend payout ratio of 43% in the full fiscal year. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare Boeing's current dividend payment to its free cash flow. Boeing generated $2.8 billion of cash flow from operating activities in the first quarter of fiscal 2019 and spent $500 million on capital expenditures during the same time period for free cash flow of approximately $2.3 billion. The company distributed $1.16 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 50%. Looking out over a longer time horizon, the company's dividend appears to be much safer. Boeing generated $15 billion of cash flow from operating activities during the last 12 months and spent $1.8 billion on capital expenditures for free cash flow of $13.2 billion. The company distributed $4.1 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 31%. Using either earnings per share or free cash flow shows that Boeing's dividend is well covered and unlikely to experience a cut even if either metric suffers a significant reduction. Boeing stock yields 2.4% at the moment. Overall, we believe total returns will consist of the following: 8% earnings per share growth, the 2.4% dividend yield, and 4% valuation multiple contraction. Adding it all up, and we expect that shares of Boeing will offer total annual returns of around 6.4% over the next 5 years. Given the uncertainty regarding the 737 MAX and the mid-digit projected total return, it is very difficult to recommend buying Boeing at the current price. On the other hand, the company does have a massive backlog, its other business components are performing well, and the shareholder returns have been too great to recommend selling the stock here. Therefore, shares of Boeing receive a hold recommendation from Share Dividend at this time. Thank you for watching this video, which presented 2 reasons why Boeing stock is a hold at current prices. We invite you to subscribe to this channel and like this video, which will help more people discover Share Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.sharedividend.com.